first and foremost, Bitcoin is going to $98,000. And the next key level after that is $110,000, all the way up to $147,000. And the peak potentially being in the $175,000 to $240,000 range. I'm going to tell you exactly how this has played out in the past using previous statistics, previous bull markets, and technical analysis. So without further ado, make sure that you smash that like button. Make sure you hit subscribe. Boom! Bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. And let's just jump straight into it, shall we? Now, what you're seeing is the Bitcoin chart, and we're going to actually go back in time and tell you exactly where Bitcoin is going in the future so that you can make good trades for yourself based upon what has happened in the past, because this is not the first time this has happened. This is actually the third or fourth time that this has happened. So make no mistake, we can predict these things, and that's exactly what we're going to do. The first thing that you're going to have to do is do your analysis of Bitcoin, but I'm going to go ahead and do that for you, and you can pick out whatever indicators it is that you like. I like to put momentum, MACD, RSI, and stochastic RSI at the bottom of my charts. And a lot of times I like to put the VPVR. That way you can see where all of the high volume nodes are and things of that sort. So let's take that off of the chart and we're going to do Fibonacci's. Nothing does better than Fibonacci's in this exact scenario because it is a mathematical calculation that actually predicts where the markets are a lot more than any other indicator ever can. At least that I've seen. So what I'm going to do is I'm going to pull up the 2016 bull run, okay? And we're going to have to scroll all the way back here, all right? And this is on the one-day chart. Now, as you can see, this is where the bottom of this chart was. And I'm even going to zoom in on it so you can see exactly what I'm talking about. Okay, so now that we have our chart up and running, you can see this was back in literally July of 2016 whenever this bottom kind of came in. And we measured our bottom right around the $475 range, all the way up to the new and eventual all-time high top whenever we went parabolic, all the way up to about $20,000, or right around almost exactly $20,005, as you can see right here. The first thing that we're going to do is obviously zoom out quite substantially, and we are going to scroll over here, and I'm going to show you exactly what happened in the bull run. So make no mistake, this will likely repeat itself. What happened is we had this massive extension all the way from about $500 to $20K. That's a pretty substantial move. That's literally a 40x. We won't be seeing that in this bull run, but you'll see what I'm talking about here in just a second. We went and retraced back down, bouncing off of the 0.382 Fibonacci, which, as you can see, is where we actually took a little breather whenever we hit the 0.382 here on our way up to the new all-time high. And we actually retraced back down to it, wicked down a couple of times under it, and then reclaimed the level. Then we came up to the 0.5 and bam, fell right back through it all the way down past the 0.236 Fibonacci. Then we went back up and tested what is called the golden pocket, the 0.618. This 0.618 or the golden pocket and the 0.786 are the two levels that you are going to want to keep in the back of your mind throughout the majority of this analysis, okay? Then we come back down and retest, making a higher low on the 0.236, and we bounce right back up to the 0.5. We try to go back down and retest the 0.382. It does not work. And as you can see, we blast through the 0.5. We hit the golden pocket, bounce back off, retest the 0.5, and then boom, we skyrocket. Where did we go? We went back up and retested the all-time high, had a little cooling off period for a couple of days, and then blasted off even further to get new all-time highs. And we'll zoom out so that we can see everything that I'm talking about here. Then what happened? We blasted off through the 1.618, and that is what this blue line is, the 1.618 at $32,000. As you can see here, we actually went up and blasted through it, retested it, and rode that 50 moving average, which is right here, this blue line that's going upwards. We rode that all the way up to the 2.618, and then we back tested it as support 2 different times, and then eventually fell back through down to the 1.618, which we then turned to support. Then we went back up and tested yet again the 2.618, fell back down, got caught at the 200 moving average, which is this green line, and then we bounced. This is kind of the confirmation point that you're going to go back through this 2.618. Then we went all the way back up through this 2.618, almost tested the 3.618, met a new all-time high at about $70,000, and then we fell back down to the 1.618, which is that major support level. We even retested it again here before eventually falling through it and going back to the previous all-time high. Then we kind of bing-bonged. All of the moving averages started to curl downwards. The 200 was above the 100 moving average, which was then in turn above the 50, and we'll even turn this 21 off so that it doesn't confuse anyone. So what happened after that? We retested the all-time high and used it as support, and we found some serious resistance at not only the 50, but once we broke through it, we found resistance at the 100 moving average, and then finally, those moving averages kind of converged over here to where the previous all-time high was, and then bam, we fell back through to the 0.786 Fibonacci level. And what did we do? We rode it the entire way across. This is going to be key. Remember this right here, the 0.786 fib. We blasted through, went back up. As soon as those moving averages started to curl back upwards, the 50 got above the 100, which got above the 200, and we retested the 1.618, came back down, found support at the 200 MA, which can be a pretty good indication that eventually we are going to blast back through this 1.618. So what happened? We went back up to the 1.618 after finding support at the 200. Bam, came right back down, fell below the 200, and then blasted through the 1.618 all the way back up to the 2.618, and then eventually up to the 3.618 yet again. And we have used the 3.618 as key resistance, not only 1, 2, 3, 4, 5, 6 different times right here, and we are reaching another point where we might use it as resistance yet again. And we're already seeing resistance at the 68K level. So the next logical place for Bitcoin to go, based upon this chart and this Fibonacci, if we scroll back over here, is about $83,000. Now, that is not the price target. That is a short-term price target. I'm going to show you the real price target here in just a second. So now that we know what the bull run looked like back in 2016 and how that played out, where we are at now, and all the supports and resistances that we watched and utilized when we were in that bull run, let's try to predict exactly where Bitcoin is going to go in this bull run using the same exact method. Numbers don't matter. X's don't matter. This might not be a 40x like it was on the previous bull run, but you will be able to see where Bitcoin could be potentially going based upon those previous levels with the same exact Fibonacci sequence. So what I did was I went ahead and plotted the 2020 bull run from the bottom to the top, and then also from the break of the previous all-time high to the new top. Okay, this one is a much more conservative one. This one is going to be a little bit more on the aggressive side. So when I say that Bitcoin's new price target is $98,000 and then $110,000, this is what I mean. If you take that fixed range from the previous all-time high to the new all-time high, your first target is going to be the 1.618, which is at $98,900. And if you take the other range, guess where it is? $109,000, right up here. So as you can see, our first price target is going to be $83,000 based off of the 4.236, which is that last Fibonacci extension from the previous bull run, and then $98,900 from the fixed range of the previous all-time high to the new all-time high back in 2023, and then $110,000 from the low of the previous bear market to the top of that 2023 new all-time high. Now, let's pull up the little bit more aggressive one. And let's look and see what has exactly happened. Now, as in the previous bull run, we went up and tested and actually got a new all-time high. Okay, we came back and fell through the golden pocket, even though we found support there for a few days. We fell through the golden pocket to the 0.5. Then we found ourselves in a range in between the 0.5 and the 0.618. Then we fell through that and found support at the 0.382. Fell through that, found support at the 0.236. And guess what we did? We kept that support up at the 0.236 all the way up until here, whenever we saw all of these moving averages starting to converge right here for massive resistance, which is why we fell through here. Then we came down almost to about $15,000, ranged for a little bit. Once the moving averages started to curl up, we regained the 0.236, back tested it as support 2 more times, and went up and tested the 0.382. Then we came back, and guess what we did? We found support at the 200 moving average and blasted through the 0.382. Then we actually fell through it and blasted through it yet again about a month later, all the way up to the 0.5, kept going up, found the golden pocket, used it as resistance for quite a while, and then we found support right here at the 100 moving average and jumped all the way up to reach a new all-time high. And that brings us up to today, where we are now using the 0.786 as support. 1, 2, 3, 4 different times, and now we are up to the top of that previous extension. So when I say that $100,000 and the $110,000 range is your next range, that is exactly what I mean. So what could happen? We could potentially come right up here to the $110,000 level in a couple of months' time, most likely, and then come right back down and find support at the previous range high, which was around $70,000. And then your next key target, after you have blasted through the $99,000 and $109,000 level, is going to be around $147,000. And guess what the next one is after that? $195,000, which I don't think we will probably get to this one. I think we'll probably get somewhere in the middle of this. And guess what that lines up with? The one that is a little bit more aggressive. So your next price target after you have cracked the $110,000 range is going to be about $147,000 and then all the way up to about $174,000. This is when we could start seeing ourselves retreat back to this 109K level and then bing bonging in between the 1.618 and the 2.618. And one last thing that I want to cover is this bull flag that we see forming right here. If we take this and you look and see what is happening with this bull flag right here, we are seeing a pretty decent bull flag forming here. And we did get outside of it with a wick at one point, but that wick doesn't necessarily mean much because it did come and contract right back into the range. So what you can do is once you figure out how long the staff of that bull flag is, you can actually take it and measure it from the price point and see where we're going to be at, which is boom, right in the $101,000 range, which gives us further confluence as to why I think Bitcoin is going to go to the $98,000 to $101,000 range relatively quickly within the next few months. It could take anywhere from 3 to 4, maybe even 6 months to get there. But once we get there, that is where you can start eyeing those 1.618, 2.618, 3.618 levels from those previous ranges. Now, with all of that being said, if Bitcoin does pump to those levels, you are going to see unprecedented numbers in terms of what is going to happen inside of the altcoin markets like Avalanche, Ethereum, some of the smaller caps that are outside of that 100 or top 100 cryptocurrencies, and even the smaller ones. You're going to see meme coins going crazy. You're going to see a lot of different stuff happening in the market. So position yourself correctly. Make sure that you are following my channel. If you like technical analysis like this, there will be a lot more going on my channel. We'll teach you how to trade. We'll teach you indicators. We will teach you candlesticks. We will teach you different types of candlestick clusters and patterns. We will teach you trading patterns, and we will teach you strategies on how you can go out and profit yourself without my direction eventually. So with all of that being said, if you like content like this, obviously, make sure you smash the like button, make sure you hit subscribe, boom, bang on that notification bell, comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.